Ladies and gentlemen, good day, and welcome to the Aelea Commodities Limited H1FY26 earnings conference call hosted by Acme Strategic Advisors Private Limited. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star, then zero on your touchtone telephone. Please note that this conference is being recorded. I will now hand the conference over to Mr. Rajdeep Patil from Acme Strategic Advisors Private Limited for opening remarks. Thank you, and over to you, Rajdeep.
Thank you. Thank you, Ryan. Good evening, everyone. I'm Rajdeep Patil, and on behalf of Acme Strategic Advisors, I welcome you all for H1FY26 earnings conference call of Aelea Commodities Limited. Today, we are joined by Mr. Huzefa Jamadwala, Chairman and Managing Director and CEO, Mr. Ashok, Chief Financial Officer and Whole-Time Director, Mr. Satyanarayan, Chief Commercial Officer and Whole-Time Director, and Ms. Devyani, Company Secretary. They will share insights on company's financial performance, key operational highlights, and strategic outlook for coming periods. So, without further delay, I would like to hand over the call to Ms. Devyani. Over to you, ma'am.
Good evening, everyone. It gives me great pleasure to welcome all of you to Aelea Commodities Limited earnings call for the first half of FY26. The first half of this financial year has been a period of strong execution, operational consolidation, and purposeful growth for Aelea. Our focus remains firmly on optimizing capacity, deepening sourcing network, and achieving our integration across the food, fuel, feed, and fertility verticals. And this has translated into robust financial and operational performance. H1 FY26 financial highlights on a standalone basis. Revenue from operations stood at 17,362.08 lakhs rupees, a 110.64% growth year-on-year compared to 8,242.70 lakhs rupees in H1 FY25. EBITDA increased by 99.76% year-on-year to 1,538.30 lakhs rupees compared to 770.08 lakhs rupees in the previous year. EBITDA margin stood at 8.86%, demonstrating improved operating leverage and cost efficiency. PAT more than doubled to 883.71 lakhs rupees, an increase of 134.65% year-on-year with a PAT margin of 5.09% as against 376.60 lakhs and 4.57% margin in H1 FY25. Earnings per share rose to 4.34 rupees, marking a 98.17% year-on-year increase. On a consolidated basis, revenue from operations was 17,369.28 lakhs rupees, reflecting a 97.96% growth compared to 8,774.03 lakhs rupees in H1 FY25. EBITDA improved to 1,524.83 lakhs rupees with an EBITDA margin of 8.78%, up from 953.89 lakhs in the prior period. PAT stood at 870.21 lakhs rupees, an increase from 558.05 lakhs rupees in H1 FY25, translating to a PAT margin of 5.01% and EPS of rupees 4.27 rupees. This strong financial performance underscores our ability to scale efficiently and maintaining disciplined cost structure and improving profitability across operations. Operation and strategic progress. Operationally, the highlight of the year has been successful commissioning and ramp-up of our Unit 2 in Surat with a processing capacity of 140 metric tons per day. The unit spread across 238,454 square feet is fully automated and designed for high efficiency and superior quality output. This expansion has enabled Aelea to handle larger volumes strengthen supply reliability, and support the growing demand across both domestic and export markets. In addition, we have acquired industrial land for Unit 3 at Vasaravi, Surat, Gujarat, spanning 412,164 square feet, which will be the cornerstone of our next phase of growth. This facility will integrate renewable energy generation and expand our byproduct processing and manufacturing capabilities, reinforcing Aelea's focus on sustainability and circular value creation. Strategic roadmap: building an integrated value chain. Our multi-phase strategic roadmap continues to progress as planned. Phase 1: expansion of cashew processing capacity to 140 metric tons per day, successfully completed and operational. Phase 2: development of cashew nut shell liquid (CNSL-based oil processing), now in advanced preparatory stages with construction expected to resume post-monsoon. Phase 3: conversion of CNSL and de-oil cake into high-value products such as cardinal and activated carbon. This will strengthen our position in value-added segment and align with our vision of sustainable waste-to-wealth manufacturing. These phases are designed to create a fully integrated and sustainable agri-value ecosystem, enhancing both profitability and resilience. Business mix and market momentum. In FY25, cashew processing contributed 20,228.17 lakhs rupees, representing 73.70% of our total standalone revenue, while commodities trading contributed 4,363 lakhs rupees, accounting for 26.30%. Within cashew, our branded and value-added portfolio under Tribal and Supreme continues to strengthen its presence in both B2B and retail markets, supported by consistent quality, strong sourcing, and customer trust. We also continue to deepen our direct RCN sourcing network across several African countries, ensuring secure raw material access and cost stability. Additionally, we purchase RCN from Indian MNCs located at various ports in India. Sustainability and governance. Sustainability remains the cornerstone of Aelea's business philosophy. From responsible sourcing and efficient energy utilization to byproduct conversion into biofuel and activated carbon, every initiative is aligned with our commitment to a greener and more efficient operation. Our BSE SME listing on 22nd July 2024 was defining milestone. It strengthened our governance framework, enhanced transparency, and aligned our journey with a broader investor base. Post-listing, our focus remained on scalable growth, capital discipline, and internal accrual-driven expansion. Outlook. As we move into the second half of FY26, we expect to maintain the strong growth strategy established in first half. Our priorities will remain centered on achieving full operation efficiency at Unit 2, advancing the construction and commissioning of CNSL-based oil production under Phase 2, and expanding our portfolio of high-margin value-added products. With solid fundamentals, strong execution capabilities, and clear sustainability vision, Aelea Commodities Limited is well positioned to evolve into diversified, green, and globally competitive agri-value enterprise. Thank you everyone for your time, continued trust, and support. We are happy to take any questions you may have and open the Q&A session. With that, I would now like to hand it over to Mr. Huzefa Jawadwala, the Managing Director and Chairman of the company. Over to you, sir, and open the floor for the discussion.
Thank you, Devyani. I would not waste much time and look forward to questions, if any, on the actual results.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, a reminder, if you wish to ask a question, please press star and one. The first question comes from the line of Jay Chauhan from Trinetra Asset Managers. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. Am I audible?
Yeah, you're audible.
Yes, sir. So my first question is, like, what was the current capacity utilization for H1, and what are we aiming for the whole year?
So, as you may be aware that we actually in the H1 operated at the full capacity only for the 3.5 months. The first 2 months typically was something that went like the way the last half of the FY25 happened. And so basically, we could not completely utilize the capacity for the entire 6 months. However, as we said, we are right now utilizing at full capacity. So the next 6 months will be at full capacity of 140 metric tons.
Got it, sir. And when you say full capacity, do you mean that we would do you have a specific revenue targets when you say this, or volume targets when you say capacity utilization?
Yeah, we can always tell you that we are at 140 metric ton per day of working day. Now you need to take into account some kind of holidays, which are basically the weekend, the official government holidays, plus some kind of local holidays. So that exactly will give us exactly the working days and into the capacity. The top line that you basically are looking forward is a formula-based stuff. Basically, you have to look into the pricing as well, at what price you are able to buy and sell. So we can tell you that, okay, yes, we will be at full capacity, but it all depends on the commodity prices, the quality that we buy, and the way the price behaves.
Got it, sir. So basically, volume-wise, you are maxed out, and
yeah,
we could see similar numbers volume-wise for H2 as well, and it will and the revenue will depend on pricing mainly. Right?
Yes. So as I said to you, that we actually were able to run the capacity only for 3.5 months in this first half year.
Got it, sir. Got it. And sir, my second question is, you mentioned that you procure RCN on order visibility, and you do it before every order, and hence you don't have gross margin risk. And so, like, how does it work, sir? Do you contact suppliers or for spot prices, and then you put your margins, which is fixed and pre-decided, and quote it to your buyers?
No, it's a continuous activity. It's a continuous activity. But what we do have is a logic is of a replacement of inventory. Okay, we run with a significant inventory, which is almost 80-90 days of our total requirements. And as and when we keep getting orders, typically we keep selling it, and on a daily basis we keep buying it. So you can be we are always there in the market, buying as well as selling, both the sides.
Got it. So basically, like, your margins are fixed only, right, and pre-decided, and it is cost plus only, right?
More or less, yes.
Understood, sir. Understood. Got it. That's it from my side, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and one. The next question comes from the line of Jeet Gala from Centra Insights LLP. Please go ahead.
Yeah, hi. Am I audible?
Yeah, Jeet, you're audible.
Yeah. Sir, so what we've understood, I think, from the previous Concall is that the company has almost reduced its trading volumes, right? Or can we continue to expect trading volumes even going into future? Because what I assume is today we are still doing some 25% is still trading, right? Out of 173 crore that we did.
26, we do not have any trading business. What Devyani reported was comparison between FY first half of FY25 and first half of FY26. In 26, we do not have any trading volumes.
Understood. So the entire 173 crores is processing, right?
Yes.
And so, like you said, your the revised capacities were there only for 3.5 months. So, looking at the run rate, we've done 175 crores, but going into second half, earlier you were guiding for 400 crores, but looking at this run rate, I think we should be able to well achieve and, go beyond 400 CR. So what would be your guidance for FY26 full year on the top line?
Typically we should be more than doubling up what the revenue we have posted, but I would not like to give you any kind of fixed number. Purely because it's a commodity. The prices, if tomorrow doubles up, the top line will double up very easily.
Understood. Okay. So is it possible to share tonnage data? I mean, what volumes you processed? I mean, in terms of tons. I mean, we know 140. Yeah.
Yeah, more or less. See, it's a very complex stuff because for first 2 months we were operating only a part capacity of the business. And the later we came up, we ramped up for full capacity. So effectively, if you can say, making it much more easy to understand, it's like 3.5 months at full capacity that you can consider.
No, so that I understood, but just on an absolute basis, if you can just provide us with the volume, I mean, that you process in first half. I mean, whatever that number be.
That definitely we can give you. You can send an email to Devyani, she can reply back to you.
Okay, perfect. And sir, can you explain, like you said, most of the buying is back-to-back hedged, and still we are seeing some sort of volatility even in gross margins. So how does that come into play? Because last year H1 we did some 20% gross margins. Right now we are doing some 15% gross margins. So if you are back-to-back fully hedged, I mean, how do we get hit to our gross margins? Yeah.
It is not that way that your margins will not have some movement. It will happen a movement because let's say you are buying a 3-day stock at once and you're selling at 3-day stocks probably at once, then you have a risk of plus minus 3 days, right? So that kind of a risk is still there. At the same time, not every, it's a natural product, not everything will give you exactly the same output. What you go through. So there will be a variation of the output as well in the processing. It's a natural product. So you can't really put a very specific number. At the same time, in percentage terms, calculation of margins is not a very right number. If tomorrow the price, let's say halves, then this same margin may in a percentage double up. Because so that's something which you could see in my previous calls also, that you can't just have a percentage fixed to.
So then, is it possible to introduce some other matrix, like something like EBITDA per ton or something of that sort? If we are only talking about absolute, right?
Yeah, some numbers, be very honest, some numbers we would not like to disclose it very openly because of the trade confidentialities. It goes to the competitors as well, when it is open simply. So, price working out mechanism is very easy for them then. But what I have explained to you is more or less that you can expect around 12 to 13% on an average EBITDA.
Understood. And so usually our business is first half heavy, right? I mean, given festivities come around October, November.
Last year was an exception. It is usually the other way around. It is the second half which is heavy.
Oh, okay. So is EBITDA margin of 8.8? Yeah, sorry.
You have the Diwali season, you have the wedding season, you have summers, which requires a lot of ice creams and everything. So it's the second half typically which is heavy.
Understood. So in the first half we did some 8.8% EBITDA, right? And annually you are guiding for 12%. So what kind of number can we expect in the second half? I mean, 13-14 is possible, or we can expect?
No. So the H1, basically when you are looking at H1 it doesn't give you a breakup of the first 2 months and the balance 4 months,
Understood.
Yeah. So the first 2 months would have been a negative numbers on a EBITDA level, in line with what we saw in the second half of FY25.
Okay. Okay. So what you're trying to say is second half will cover up for operating leverage also, right? I mean,
Yes.
the bigger facility with higher utilization and seasonally second half being a stronger half.
Yeah.
Okay. But still, on an annual basis, can we still continue to expect 11%-12% EBITDA for the entire year,
We can.
or that will be too stretched?
Yeah, we can.
Okay. Okay. And so what is the planned CapEx I mean, what kind of CapEx you've done in first half, and what is the planned CapEx for the balance year?
So we completed the CapEx that was intended for the phase 1 in the month of May. Soon after that, you had rains coming in. We have now embarked upon the phase 2, which is the CNSL stuff. As I have already mentioned previously, that we may complete that before end of the year, FY26, or maximum in a month in FY27. We have also placed orders for the solar plants, which is around 4 megawatt capacity, and that should also see a similar completion timelines. So that will also come up at the same time. Overall processing cost, roughly 25% of that, 25 to 27% of that is power. So solar really strategically also from a cost perspective suits us. At the same time, it aligns ourselves with the sustainability targets that we have benchmarked internally for ourselves.
Understood. Okay. That's it from my side. Thank you. And I'll just connect with Devyani for few data points.
Sure.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. The next question comes from the line of Kaushal Sharma from Equinox Capital Ventures Private Limited. Please go ahead.
Hi, sir. Actually, my question has been answered. So thank you very much.
Thank you, Kaushal.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. Ladies and gentlemen, a reminder, if you wish to ask a question, please press star and 1. We take the next question from the line of Shiv Amatu, who is an individual investor. Please go ahead.
Yes, thanks. See, based on the discussion in this call, I would think that, within H1, there is a Q1 and Q2. Obviously, you announce all together H1, but Q1 would be to the region of, because it was running at a 40 MTPD capacity at that time in Q1. So it would be about 50 crores, and the second quarter would be more like 120 crores. Would that be aligned with how the revenues would have shown up in your numbers?
See, the top line, from a top line perspective, more or less, yes, from a top line perspective. But from a bottom line perspective, there is a big...
I know you suggested that I think Q1 was maybe negative and aligned with H2 of last year. And so all the EBITDA and slightly higher than that would be the EBITDA of the Q2 within the H1.
Yeah.
Yeah, so I think that is something. And what would be the next? Obviously, you would be doing maybe 40 crores of revenues every month. That top line. I mean top line. And so going forward, I would imagine I think H2 would be maybe slightly better, as you suggesting that, H2 is better than H1 and more demand. And therefore, H2, maybe I think you would be, and you had earlier suggested that as you expand capacity and operationalize it, the utilization will be very quick because there is latent demand.
Yeah.
So you would be coming close to optimal capacity utilization as well.
We have already achieved the optimal capacity. We have been operating at that for now almost 3.5 months.
Right.
Yeah. And
so there is always latent demand, as you suggested, and so therefore, what you make, you can sell quickly.
Yeah, the demand increases, so there is a slightly a premium to the lower grades that starts coming in, and that reflects in your bottom line.
Yes, I think you earlier indicated that value-added products will be a higher percentage of your output. And so that being the case, what would be the next trigger for you, in the sense that I think you are looking at the next phase of expansion, possibly? I think further.
What is already known to people is the fact that we are already looking at phase 2, which is the oil segment. The other unit 3, which is purely the solar part of it, and phase 3 is immediately after phase 2 for the processing of the oil and biochar. Now that is the planned stuff. What is a key difference that we have done is, which was already known to public, is that we have formed a subsidiary, 100% subsidiary named as Aelea Green Energy. That the company would be taking care of the entire ecosystem in a different way. The sustainability certification part of it really adds to a premium to this oil and biochar, especially from the export market perspective, where these certification helps us extract a better price from the European market, where carbon credits are traded and everything.
Right.
Further, it allows us to slightly de-link the more capex-oriented growth that we are looking from the cashew side of it, and also tap in the sustainability energy side of it with Aelea Green Energy entering into this independently in the different market sites.
So the export constitution of the revenues will increase going forward, is what you expect?
Yes, the revenue more than we are not never a company that looks towards top line as a parameter of anything.
Got it.
But we are very focused on our balance sheet as well as our bottom lines.
No, good. Yes.
So that is our story is more in the balance sheet rather than in the bottom lines in the P&L.
Got it. So, and how does the solar stack up for you in terms of how much have you put that out in the public domain as well, in terms of how much you invest in solar and what are the cost savings that will come to you as a result of that?
So around processing 27%, I could say 27% is the power bill that we pay.
27% of what amount?
Of the processing cost is the power bill. Okay. And as a thumb rule, typically the power that you have from a captive solar is almost at 30-35% of the grid power. So that significantly makes economics for us. Further, it also helps us in getting the sustainability certifications that we need on this whole cashew as well as energy side of it.
Yes.
And internally, more importantly, we are focused on keeping that as one of the core principles in which we work.
Okay. Got it. So I think so the payback goes beyond just the numbers. I think it also expands the business for you.
Yes.
Okay. Okay. And what is the financial payback in terms of number of years that you can indicate? I think do you get some subsidies from the government also for
No, for the commercial side of it, there is no subsidies from the government side, but it has its payback, which is typically around an IRR of 28%.
Okay. Plus positive implications for the business is what you're saying.
Absolutely. That is something which we have to measure ourselves.
Yes. Thanks. Okay, I'm done with this. Thank you.
Okay.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and one. We take the next question from the line of Meet Mehta, who is an individual investor. Please go ahead.
Good evening. So the 5 crore differential in the previous H1 is mainly because of the trading numbers, or how should we look into it?
5 crores basically PBT.
No, in the top line. Because in this H1 we have similar numbers for consolidated and standalone numbers.
Yeah. So because the trading activity was there in H1 FY25 in consolidated, so that's the reason. Yeah, absolutely right.
Yeah. Thank you so much.
Thank you.
Thank you. We take the next question from the line of Suresh Kumar, who is an individual investor. Please go ahead.
Sir, good evening.
Yeah.
First, I want to congratulate the company for having achieved good financial numbers. Especially you have come out of negative EBITDA compared to the last financial year end. Sir, now having achieved this full capacity utilization, that 140 tons per annum, as per my understanding, I think company can do a minimum sale of 40 crore per month. So it is expected that for the next 6 months, you can achieve minimum 250 crores of turnover. And with an operating profit margin of around 12, I think I can expect an operating profit of around 30 crores for the next half year. Is it correct, sir? Approximately.
Yeah. So your workings are absolutely right. But as I said, you have to take into account commodity. We cannot tell you the prices of commodity will remain same today or tomorrow. That is not in our hands.
Okay.
So yeah. So otherwise, your workings are pretty much on the target, right?
Sir, what is the commodity, this cashew price trend for the last 2 years, and what it is expected for the next year as per your view? Can you give us just a brief understanding?
So from a cashew perspective, these prices since last 12 months has been is in a downward trajectory. The pace has significantly reduced in the trajectory. It was at a significant pace in the last quarter of the previous year, and the impact has now slowed down. But that is how this commodity is. We do not try to speculate on that, and we tend to remain on a back-to-back basis because this food and everything is very critical for a lot of countries, and we have to be sensitive about that pricing as well. Now, if you purely see from a demand-supply perspective, for next 12 months, I can say that there's a significant crop that has been added in last 1.5 to 2 years into the market, and that will keep the pressure on the prices to rise from here. Now, that is in a way good from a consumption perspective because whatever replacement can happen of cashew will never happen. For example, I'll give you if sweets are supposed to be made for, then the amount of, milk-based sweets would not be so much compared to cashew-based sweets. The usage of cashew in ice creams will also will not get replaced, and the usage of cashew as a snack compared to any other dry fruits, which is almonds or walnuts or pistachio, will not get replaced because it is in a more or less tight price trajectory. And that is beneficial from a consumption perspective, and especially from a country like ours where we are price sensitive. So from a growth perspective, from a consumption perspective, this is a good time to be there.
Okay. Sir, compared to March 2025, your borrowings also has come down by 12 crores. So that also gives a benefit of some 3 crores of around 3 to 5 crores of interest benefit to operating profit.
So yes, borrowings have reduced. That is purely from rather than only borrowing from a financial interest perspective, it is actually a very long commitment and trust that our supplier shows on us. It allows us to increase our capacity without having any working capital constraints, and that helps us far more than the finance cost. If be very honest, no one gives you anything for free, right? If the finance cost is borne by them, then they would be looking at a slightly better margin. But the fact that it is available to you allows you to increase your capacities and without having to worry about the working capital requirements.
Okay, sir. Okay. Sir, my final question. Sir, in September 2025, that tax percentage is little higher, like some 30% compared to previous quarters. Why is this?
See, that is basically calculated on the kind revenues that we are drawing from, and kind of deferred tax liabilities and everything that we have. Finally, the final percentage will depend on the year-end closing. So this is something the view that the auditors are calling with the tax authorities have been taken into account.
Okay. Okay, sir. And with the commencement of Unit 3 in that next financial year, with the renewable energy and all, I think profitability and operating margin, I think it is expected to increase. Correct, sir?
Certainly, our power bill reduces, definitely.
Okay. Thank you, sir. Thank you, sir. Okay.
Thank you.
Thank you. Ladies and gentlemen, a reminder, if you wish to ask a question, please press star and 1. The next question comes from the line of Jeet Gala from Centra Insights LLP. Please go ahead.
Yeah. Sir, can you just, briefly explain what is the input and output ratio? So for example, if you process 1 ton of raw cashew nuts, what kind of cashew nuts come out, what kind of oil can come out, and what kind of cake can, come out, just to understand, in ton itself.
I'm giving a very general thumb rule. It will vary, but I'm just giving a general thumb rule. The general thumb rule is that you will have roughly 100 kgs of raw cashew nuts going in. You'll have 70 kgs of cashew shell and 30 kgs of cashew with the skin. Of that skin will be 7 kgs, and typically you will get 23 kgs as your edible cashew. From the 70 kgs of the shell that you have got, typically the oil would be around 22%, which is 14.4 kgs from a raw cashew nut equivalent. And the balance would be de-oiled cake.
Balance is out of 70 kgs, right?
Yeah, out of 17 kgs. So 70 minus 14.4. And the de-oil cake would then have roughly 7 to 8% oil in it, which can also be extracted. And you can have charcoal, which will be roughly 50 to 55% by weight. It depends on the thermal application, how much time it takes, how much treatment that you put into.
Understood. And sir, right now, what do we do? I mean, so beyond raw cashew nut processing, whatever we are left with, what do we do with that?
That is sold out right now.
Okay. So the entire shell is sold out.
Yes.
Okay. And probably another 7 kgs of skin that comes out from
Yes.
cashew nut. Okay. Okay. And what are the NSRs over there, sir, broadly?
See, that those are typically taken into account as a scrap sales, and the margins are calculated basis the net of that.
Okay. All right. And so secondly, are we facing any pricing pressure right now, given the prices are on the downward trajectory? Probably demand may not be as strong as it was, 12 months back. So how are we managing our pricing?
Pricing pressure, we won't say pricing pressure that is there, purely because consumption still exists, and it's growing phase of consumption. So every year, you see around 6 to 7% growth in the consumption. What yes we can always say is that that to have a significant scale that has increased for us, and that requires additional efforts. Fortunately for us, these additional efforts were well planned. The delay also allowed us to further strengthen our efforts in that direction. So we have not seen that issue as of now. We can't say that we won't have this issue if everybody starts doing a cutthroat competition. But even at that cutthroat competition, we have significant margins compared to industry average. So we are at the cheapest level of processors, and that allows us to stay afloat irrespective.
Understood. And sir, if we want to track cashew nut prices, I mean, where do we look at it, sir? Online, if you can, suggest us where to look.
There is a big challenge with variations because this is a natural product. It doesn't have a very standard pricing. It is like you have a quality, you have a moisture, you have which origin from, you have nut count. There are multiple factors that get into the pricing, and each variation can change the price of that cargo. So it is a very dynamicness. It cannot be standardized. That's the reason.
Is it possible to share from your side some benchmark cashew nut pricing chart for the last 3 to 5 years? We don't want the rates that you do business at, but generally just to understand where the pricing really lies. I mean, just to...
Yeah, I can just share with you one kind of a great quality price, but it will be very difficult for you to give a benchmarking of it. Sometimes, for example, let's say I give you the best quality price, and in a year where the best quality is significantly bumper, that time the prices may reflect slightly negative bias. And in a year when it is the average quality is being produced, for the best quality you may see a premium being given. So it is not something which is very easy to benchmark.
Understood. So just on a ballpark, I mean, how much has the prices corrected in the last 12 months on percentage term?
On a ballpark basis, it has corrected by roughly 17 to 18%.
Understood. And sir, can you tell us more about competition? Because what we've understood is that most of the processors, they are based out of south of India, right? So, I mean, is 140 tons per day the kind of unit that we have is one of the largest? I mean, if you can just throw some light on the kind of facility we have versus what the peers are doing.
See, we have roughly around 2,000 processors in India. They are spread across now in India. Predominantly, yes, those people who have started processing 20-25 years back will all be in South because that is where our crop used to be. We have a lot of processors in Maharashtra as well. And then we have the new crop regions like Odisha and West Bengal. We have crops there. But since it became an imported, we predominantly have an imported crop, which accounts to more than 60%, 60-65% of our consumption. The last 10 years have seen a lot of facilities coming in the Western Indian side. And there are facilities up till Haryana as well. You know, you have a cashew processor even in Haryana. Now, but because, you know, there are 2,000 cashew processors and they are typically ones which are less than 10 tons. 95% of them would be less than 10 tons per day capacity. Their mechanization levels are not up to the levels that we have. Their ability to buy and scale, get the economies of scale is not up to the levels that we have. And they cannot employ people with significant expertise in one segment. That's the key issue for them. Because it is more or less an individual knowledge driven up to that level. Now, that is the biggest differentiator for us. So if you can compare it with what has happened in Vietnam over the last 30 years in the cashew industry, you can see that, you know, they have consolidated because the scale could only make you survive.
Okay.
And if you go back to our previous calls, you would have noted me saying this as well, that, you know, some of these cashew processors were not processing until the festive seasons kicked in, and most likely post the festive seasons may again stop processing, you know, because they are not viable.
Okay.
Their costs are super high vis-a-vis our scale kind of a thing. Now, we do not have a comparison of our scale because we are the only one with the unique advantages of being in Western India at the same time being at such a larger scale. And that is the
Hello. Hello.
Ladies and gentlemen, we have lost the line of the management. Please stay connected while I reconnect the management. Thank you. Ladies and gentlemen, thank you for your patience. We have the management line reconnected. Jeet, if you could please repeat your question for the management. Thank you.
Yeah. Am I audible?
Yes, Jeet.
Yeah. I think, sir, you were talking more about the size of our unit compared to probably the other units in south of India.
Yeah. So as I said, probably we have a lot of 95% of the units are less than 10 metric tons per day capacity, and that is a scale where, you know, you can't do mechanization as well as at the same time have people with higher skills employed. That makes a big difference. At the same time, for us in India, we do not have a comparison because we are based geographically in Western India, which is the hub place. At the same, and with this kind of mechanization and automation that we have, we do not have a comparison right now. But if you compare it from a global perspective, let's say Vietnam or any unit that has come in Africa in last 2 to 3 years, we have an advantage because of the latest technologies and the kind of proprietary inputs that we have incorporated in our factory. Yeah, and that along with the home market is a significant advantage that we have in our way. The other part is that being an integrated value chain player, this is one of the case. You do not have someone who has a vision to scale up till the biofuel and a biochar kind of a value chain. That is something which is missing across the globe for multi reasons. For Africa, you don't have the buyers for that. From a Vietnam perspective, you do not have a buyers from that. You do not have ready markets where you can do it, or you do not have certifications, sanctity over there. All these things really make it a very different game for people. So, but the differential is the mechanization and automation that we have here.
Understood. And so my last question is, sir, so we do our imports. So like you said, almost 50 to 60% of the cash is imported, right? And then processed. Then during what times are we as importers at a disadvantage as compared to other processors who have their own captive cashew crop?
See, no crop is captive here in India because as a corporate or you cannot farm. Now, what we are saying is basically people who are near to the local crop in India vis-a-vis the imported crop. Then there is a very, very small disadvantage that we would be. But again, that disadvantage cannot be exploited by anybody who has more than 2 tons in capacity. A larger crop here in India is always sold in a wet basis, which requires any factory to have a significantly large drying area. Now, that drying area in a factory premises is difficult to have, and it can take it up a lot of your capex as well. So people would not trade off between buying a land and machinery. They would definitely go for a machinery, and that is the reason why these small units, which is 2 tons or lower, has an advantage there. But then, it's not a great advantage when it comes to our scale, because our scale would make a big difference.
Understood. Very helpful, sir. Thank you so much.
Thank you. We take the next question from the line of Sri Hari Totla from Totla Capital. Please go ahead.
Hello, I am audible?
Yes.
Yes, sir. My question is, in FY25, the revenue top line was 182 crore. I want to know how much is the cashew processing and how much is the commodity trading in that?
That breakup you can get it from the financials. That is already given there.
So I am seeing there, but breakup was given as only 165 crore breakup is given, not 182 crore.
No, so because you are looking at a standalone, the balance in the consolidation, the balance is pure trading, which is in the subsidiary.
subsidiary.
Yeah.
Is it in the PPT?
Yeah, it will be there. You can just have a look at the BSE exchange. You can have these details there.
Okay. Thank you, sir. Thank you.
Thank you.
Thank you. We take the next question from the line of Jay Chauhan from Trinetra Asset Managers. Please go ahead.
Thank you for the follow-up. Sir, I just have one more question where, I just wanted to know if you get higher orders, let's say for in the higher volumes of orders in the festive season, how do you arrange that? Do you trade or do you run?
No, we do not have a policy of trading because, the advantage why, the customers would come to us is that, they can get a standardized quality and quantity. So a large volume buyer would love to have one single supplier which can give him a bulk quantity, and that advantage gives us a preferential access to our customers. If we start doing buying from someone else and start trading the kernels, then that advantage would be lost, and some or the other day the scalability will have a challenge.
Understood, sir. Understood. So basically, you will have to, control your orders as well in that sense, right?
Yeah. So we, if you remember that we have a standard which we say what is the nay rate that we calculate. We always like to have a certain healthy nay rates, which is basically to say that sorry, we do not have the stock. That healthy number we try to keep it. As soon as we feel that that number is growing significantly, we may have to look for an expansion as well. Because you don't want your customers to come and feel that they will never get stock here. That is also something which is not healthy for you.
Understood. Makes sense. And sir, where do we get our machinery from? Is it co-made locally or is it imported? How is it?
It's indigenous as well as imported. A lot of things has to get imported. Their technology is significantly advanced with artificial intelligence built in.
Understood. So these technologies haven't reached Vietnam and Africa yet?
No, not. So these technologies are not there from Vietnam or Africa. Mainly that technologies are ideally from China or Europe.
Got it, sir. Got it. Understood. Thank you. That's it from my side.
Yeah.
Thank you. We take the next question from the line of Dia from Sapphire Capital. Please go ahead.
Hello, sir. Just wanted to clarify. We do not have any trading volumes for H2, right?
Yes, Dia. That's right.
So the commodities trading revenue mix that was provided of 26.30%, that is through your subsidiary?
That was H1 FY25.
Okay. So what is the revenue mix for H2?
It's 100% cashew.
All right.
FY26 is 100% cashew. H1 FY26.
All right, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, we take that as the last question, and we conclude the question and answer session. I now hand the conference over to Mr. Rajdeep Patil from Acme Strategic Advisors Private Limited. Please go ahead.
Thank you, Ryan. Thank you, everyone. Thank you all the participants for joining us on H1 FY26 earnings conference call of Aelea Commodities Limited. We truly appreciate your time and continued interest in the company. For further queries and clarification, you can mail us at info@acmeladvisors.com. Thank you, everyone.
Thank you,
Rajdeep. Thank you.
Thank you, sir. Thank you.
On behalf of Acme Strategic Advisors Private Limited and Aelea Commodities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.